Hello, just having a look at a few of the main charts that just started February. January was the best January for stocks in 35 years, and following on the back of the worst December for stocks in 100 years. So it's certainly been an interesting one. It's been a fantastic January, and it's actually gone. S&P 500's actually gone on to test the 100. I didn't think it'd make it up here, but it looked like it was going to put in a reversal here, but it never confirmed it, and it went on to test the 100 MA. It's looking like the Fed has gone really dovish now, so they may not even raise 2 times this year. It could be out of the question to raise at all this year. That's what the market's certainly anticipating now, it seems to be. So quite an interesting story to see what happens from here. But let's have a look at the VIX. The VIX now is pulling right back. It looked like the VIX was going to break out here, but never got any momentum. The weekly is still to the downside here. Momentum's to the downside of the weekly, but I'll be looking for evidence of a short-term spike in the VIX, but you won't, not likely to see any when the MACD on the VIX, on the daily VIX, is below the histogram line here, below what I call centre line there. It's not going to really see any big spikes in volatility in that case. Nasdaq is also testing the 100 MA here, so it's going to be really interesting to see what the outcome is from here. I'd like to see the market pull back a bit before moving too much higher. But now the Fed, the way the Fed's looking, it's not going to be. It's certainly given stocks a bit of buying power to rally on again in the short term, at least anyway. Junk bonds broke above the 100-day MA as well. I was watching this. I thought this will be a point where junk bonds turn down, ultimately causing weakness in the stock market as well. But it's actually broken out now on the back of the Fed comments. So it's now testing up to this key resistance on the weekly. So it's going to be very interesting to see what this does here. But I'll be watching to see if junk bonds are turning down. Any sort of look like this, what we had back here, that was October there, so that was a very bearish breakdown there. So, and was this a very bullish break to the main? This is the main reversion. It's counter trend. So, just seeing what happens there. And the dollar index now is with the dovish Fed. It did test up to the top of the trend here, but it was very brief, and it's turned back down again now with the comments from Powell. So, as I said, a lot of experts were expecting a stronger dollar, but I didn't see anything in the short term to have suggested it was going to be. Didn't suggest anything strong. There's nothing to suggest a strong buying of the dollar in my analysis, and remains to be seen what happens there. But emerging markets have had a huge rally since the start of the year, so it's been good for gold, and gold coming up to a key resistance level here, 1343, so it's going to be interesting to see what gold does at this level here. But with the weaker US dollar, if the dollar continues to weaken, I think gold's going to probably break above that level, but take as it comes. And oil's also been quite bullish on this breakout here. There's been some quite good moves here on the shorter time frames, on the smaller time frames, and day trading on the intraday chart. So it's quite a bit of room for the upside still, and the MACD's now turned up, so crossed up, so could be a bit more upside in oil yet. And that's about it. Just a quick one today. And we'll see how it goes from here. But yeah, certainly it's very reminiscent of what happened in 2016. The market just went from quite a bearish outlook to quite a strong bullish outlook, and see where it goes. No point making long-term forecasts because it's just a waste of time. Right.